Welcome everybody to today's Gold and Silver Club presenting Commodity Markets Outlook for December, the FOMC special. So presented by myself, Phil Carr at the Gold and Silver Club. So the session today essentially will be covering a week ahead preview for the metals and the energies. We've got the FOMC statement which is going to be occurring tomorrow. We'll go through live market commentary and technical analysis. We'll be providing you with a watch list of trading opportunities that we are looking at the Gold and Silver Club, trade ideas as we head into the FOMC statement tomorrow, and really how to successfully profit from the FOMC announcement this month. We'll give you examples of how we previously traded this on our live trading room, what you can anticipate, the volatility of that announcement. We're coming into a historic FOMC statement where we could potentially now see an interest rate rise, which will be the first in 10 years in the US, so it can have some big impacts on the markets, and we're really here to provide you with some good preparation. So it's glad to see so many of you here for today's session. So first of all, before we get started, I'll introduce you to the Gold and Silver Club. Essentially, we are an international commodities trading research and advisory group. We specialize in the precious metals, the energies, and the agricultural markets. We are recognized as the leading go-to authority on commodities. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, The Wall Street Journal, to name a few. Our team of experts has advised and taught technical analysis, fundamental research, and portfolio management to more than 75,000 private and institutional traders worldwide. So you're absolutely in good hands today. So first of all, we'll take a look at the gold price right now. We've actually seen the US dollar pick up some strong momentum over the US session this afternoon. We've seen gold trade currently at $1,060 per ounce. It's actually setting up really nicely at the moment for an FOMC trade tomorrow, and I'll go through that. The reason being is we're so close at the moment to those 6-year lows, where if we take out those levels tomorrow, we could be on for a really big windfall trade as we potentially head down to $1,000 an ounce. So gold's looking very interesting at the moment. We'll cover that in detail when we go over to the technicals. So the first big opportunity right now to have on your watch list, which is coming up tomorrow, is of course the FOMC statement. Now, as head of the Federal Reserve, Janet Yellen has more influence over the US dollar's value than any other person. So her speeches, they're followed very closely by traders, usually present very lucrative trading opportunities. That's exactly what we'll be looking at tomorrow. It's at 7 o'clock UK time will be the actual statement, and that's what we'll be looking to trade live. Now there are 8 statements over the year. This is the final FOMC statement of 2015. A lot of traders will be getting themselves prepared for this potentially hugely profitable announcement. We should certainly see some big moves in the market. It could be a catalyst for some bigger moves as we head towards the end of December as well. We could really start to see the overall momentum be dictated by this statement tomorrow, the overall sentiments of the market as we head into January. Now, I'm going to go through some key points that will really assist you with trading that FOMC statement. So there will be all levels of traders here, from beginner to advanced. Those of you who might have traded commodities before, you're trading Forex, or you might trade the stock market. I'll go through with you how we typically would actually enter this FOMC announcement in terms of the precious metals, and in particular trading the inverse correlation with the US dollar. So the US dollar is very important when we're trading off the statement. So essentially, when the FOMC statement is released tomorrow, we will be looking at 2 main scenarios. So what everybody is anticipating is a potential rate hike. So if the Federal Reserve, they do go ahead and they confirm a rate hike, we would expect that to be strong for the US dollar, see a bullish breakout, and that would provide a sell for gold. So far today, we've seen the US dollar actually spike to the upside. It's taken out the last 3 days worth of lows. So we're at weekly highs right now, the US dollar, as we're coming in to the FOMC statement tomorrow. We're seeing gold, which is only sitting about 150 points away from breaking down from 5-year lows here. So we are very critical. We're not far from critical levels of support. So if they do go ahead and confirm a rate hike, we would anticipate that to be bullish for the US dollar and bearish for gold. And we'll be looking into that FOMC statement in more detail. The scenario number 2 would be the FOMC confirms no rate hike, which would really surprise the market. That would be bearish for the US dollar, and we would then expect a breakout on the precious metals. In particular, gold is what we'll be following very closely. We trade this live with all of our traders at the Gold and Silver Club via our private traders club, and we'll be trading that live And this is what we'll be looking out for primarily. Initially is the US dollar. So we'll be having the US dollar up on the screen. We'll also be looking at gold in context to the inverse correlation. You can see here, this is a typical inverse correlation you would expect. So if the US dollar breaks out tomorrow on the FOMC statement, we would anticipate a breakdown in gold. So you've got the US dollar on the left there presenting a buy opportunity, and gold, which is obviously breaking key support and selling off. That is the inverse correlation we will be looking at and be monitoring very closely as we come into the statement tomorrow. And then you just want to marry that up with a technical setup. And ideally, if you're at very close to key levels, for example, you're near to breaking 4 or 5 year lows, it really adds a lot of momentum to the trade. So for those of you who trade oil, we just recently had the OPEC meeting last Friday, the 4th of December, and that provided us with a really good sell short opportunity once we actually saw oil break down from 5 year lows and then broke 7-year lows, and just yesterday tested just shy of 11-year lows once we broke through critical support. And we're getting really close to these major zones on gold and silver. So I'll talk you through that when we go over to the technicals. The other point you want to bear in mind when you're trading the precious metals is the seasonal effects, okay, that influence the commodity prices. So seasonal effects are very important. And this time of year, if you go over historically and have a look at how the markets move at this time of year in December, historically, if you go back for the last 15, 20 years, gold actually moves really well over the month of December. It's typically used to be a strong mover over the final 2 weeks of December. However, over the last 5 years, particularly since we saw the precious metals top out in 2011, that overall seasonal move to the upside that we see at the end of December has changed. We now are into bearish territory as we typically come into the last 2 weeks of December. If you look at this over the last 5 years, which is the blue line on the chart, you can see typically over the last couple of weeks of December is bearish. So we would be, particularly with gold at the moment, you've got a very bearish primary trend. You're at key levels of support. The FOMC statement, if they go ahead and confirm an interest rate hike, you would anticipate that to be strong for the dollar, but then we'll be looking into more detail of that statement in terms of the cycle of those interest rate hikes. But overall, the picture is looking fairly bearish at the moment for the gold market. What we would just require is confirmation. But at these event areas, you can also see big breakouts like we saw on Friday, the 4th non-farm payroll, where we saw the US dollar sell off on the non-farm payroll numbers. Gold broke out, but the breakout was the biggest move since January this year because of the short covering. There are so many traders who are selling short into gold at the moment that if you get any big spikes to the upside, it causes short covering, and subsequently we get big breakouts to the upside as well. So I expect a big move in either direction, just depending on what the FOMC statement, what they deliver tomorrow. Now, if you haven't traded the FOMC statement before, or if you haven't seen how gold moves on the statement, I will show you some of the statements that we've been trading ourselves with all of our traders at the Gold and Silver Club. These are setups we've posted live, and we traded live with our traders from our private traders club. So this will really give you an insight into the sort of moves that you can get on the FOMC statement. So if I bring you back to September 2011, this is where the Fed actually came out with Operation Twist. This is a setup that we covered on our live trading room. You can see here actually you've got a little V-shaped reversal pattern, actually a nice neckline. We're coming down to key support where we're actually starting to break. You can see on a downward trending channel, but we're starting to break through support. So we were looking in this instance for a break of 38.85. The stop loss just above the resistance zone there, giving the trade a lot of space to breathe. Got our exact entry level, our exit level on the trade, and our stop loss there. And once the Fed actually came out with Operation Twist, we had a huge sell short opportunity on that announcement. So you can see the breakdown in price. We had over a 700-point move in 24 hours. This was after this was when we'd recently seen silver break up to highs such as $48 per ounce over 2011. This was a huge move to the downside, and you can see that consolidation where we got entered into the trade, over 700 points profit on the trade. You can see just from the profit calculator how much that is equivalent, just depending on your account size, how much that works out to. I can tell you it was a very profitable trade for ourselves and also for all of our traders at the Gold and Silver Club. The big point about that was that it was a very fast profit. It's just 24 hours, over 700 points profit, and that was all from a September FOMC statement, all just on one major news announcement. We always trade these live because they are so profitable. The subsequent year, they actually came out, the Fed, and they did QE3. As you can imagine, that had a huge boost for the precious metals. We traded this in a breakout from key support zones, and again, this was over a 500-point move in 3 hours. So very quick move in a very short period of time. Now, going back to June 2013, in this instance, the FOMC, they announced US economic recovery, which then caused the US dollar to break out. Now, prior to this, we had a consolidation. So this is very common to get a consolidation on the market just prior to an FOMC statement. So traders are not wanting to have too many open positions running just beforehand. But as soon as the actual announcement breaks, then we get triggered into a trade and we're looking to take advantage of a breakout in either direction. So in this example here, you can see where we got in at 1369 was our break of major consolidation here, the support zone, and subsequently, this was in June 2013, we've had a beautiful sell short opportunity on that once we've broken through support 1369, and that's been over a 900-point move in 48 hours. Now, what's worth noting, it's really when the FOMC, they come out and deliver major high-impact news, such as interest rate decisions, ending of QE, starting of QE. These are typically the trade opportunities that really give you the most bang for your time in front of the screens, because often we'll see a move over 24, 48 hours, a hugely exaggerated move in comparison to your day-to-day move. So if you look at gold's day-to-day volatility, it normally moves about 150 to 200 points per day. On a major announcement like the FOMC, it can move up to 900 points over just a couple of days. We saw recently the October FOMC statement, we dropped to gold moved over 650 points to the downside in 5 days. It was a lovely sell short opportunity, but it's the FOMC statements that really can deliver these sort of moves for you quite quickly. In June 2014, the FOMC, they announced no change to their QE policy, where there were expectations for a change in that, and that caused, you can see gold just twitching there to break out. This is our overall setup on the trade. You've got a nice precision setup in this instance, nice little hammer forming just ready to go, and subsequently we've had a huge breakout trade over 400 points in just 24 hours when they've not changed their policy. Now, this was a great opportunity that we had going back to October 2014, and it's very similar actually to this statement, because there was a lot of expectation that the FOMC, they would end quantitative easing, and if they would go ahead and do that, we would then expect that to be bullish for the US dollar and bearish for gold. So we were looking to get into that on a break of 12.19, stop loss at 12.38, very clear trade setup. You can see this is a great example again, V-shaped reversal pattern. You should be able to see that. You've got a nice little neckline sitting at 12.19, V-shaped reversal pattern. This is where we're getting into the trade at 12.19. The stop loss is above at 12.38, and we're looking to take advantage of a breakdown in price on confirmation that the Federal Reserve are ending quantitative easing. They have gone ahead and they did end quantitative easing, and with that we got triggered into our trade. You can see the sell signal, which has also come up when we set our alerts, also provide that for all of our traders on the Private Traders Club. They also get alerts to their email once we're getting triggered into a trade, once a new setup is provided, so everybody can see the exact entry, the stop loss, the exit levels that we're trading ourselves at the Gold and Silver Club. And you can see this October last year that we had over 600 points in just over 12 hours on this trade, and subsequently we saw the market actually break down over 750 points in the next 48 hours. It was a huge move, and this is where we broke through major support, and we could get something very similar happening this year as well on tomorrow's announcement, because we're so near to exceptional key lows. So you can see here this time last year, well in October last year, gold broke down from 4-year lows, and this is where you really saw an exaggerated move. So even if you're trading a 600-point move of $1 per point, over $600 profit for you at $10 per point, $6,000 profit, $20 per point, $12,000 profit. The point is, it's very fast profits that we've taken advantage of these major news announcements. It really gives you a nice bumper Christmas bonus. This was March 2015. We saw the FOMC, they delayed their rate hike when there was anticipation for them to go ahead. So all of 2015, there has been expectation each FOMC announcement that the Federal Reserve would go ahead and they would raise interest rate hikes. Now, each time that hasn't occurred, we've seen a breakout on gold and we've seen a sell-off on the US dollar. So in this scenario, we've got a nice little box set up. We're testing the upper end of resistance. We're looking to get in on a break of 1,176 US dollars per ounce, and you can see here once that level has been breached, we've broken out over 435 points in the subsequent 5 days. So in this scenario, because the March FOMC statements tend to be not as volatile as the ones over September, October and December, we've had a really nice move, but it's taken a few more days. So over 5 days here, we've seen our trade get into 435 points worth of profit until it's hit our Fibonacci above and our profit target there. Now, more recently, this was the September 2015 FOMC decision. They kept rates unchanged. So you can imagine, again, if the FOMC, they keep rates unchanged, that is bearish for the US dollar and bullish for the gold market. And with this, again, our entry at 11.12, we've got a nice little consolidation, nice pennant formation, and we've broken out to the upside and had a lovely 400-point move. So as they've kept the rates unchanged. And finally, more recently, which some of you may have caught this move, it was a beautiful technical setup. This was where the FOMC hinted at a December rate hike. So this is why we've got so much anticipation for tomorrow's decision, because at the FOMC statement going back to the end of October, the Federal Reserve came out and hinted that there would be a rate hike in December, dependent on the figures coming out of non-farm payroll on Friday the 4th of December, and those figures were positive for the US economy. So there's even more anticipation now of a rate hike tomorrow. And this was the setup that we got. Immediately on that announcement, we saw a really nice rejection candle set up, very big inverse hammer. We also traded this. It was such a good opportunity. We traded it through gold and also palladium. We got in at 11.53, our stop loss 11.83.50. We continued to trail the stop on this because it was such a good trading opportunity. We got over a 750-point move in 7 days there, so that broke down really nicely as the FOMC hinted a December rate hike. So we would potentially expect a similar move if they do come out and confirm the rate hike tomorrow. And you can see also the palladium setup that we got. This was on the weekly chart, so we're looking for a break of 679, stop loss at 726. Again, this was a trade alert we posted to all of our traders, including the entry level, the stop loss, and the exit level. And you can see where we've broken down significantly, over 1,400 points in the following 7 days. Palladium trade was really a star performance, star trade over October and November for us. That FOMC statement was the catalyst for a really big breakdown. So I hope that really gives you an idea of what you can anticipate for tomorrow's FOMC statement, some of the large and very profitable moves that we can expect to get on the markets. We'll go over the technicals. If there are any questions, do keep those coming in the chat as well, and we can go through those whilst we're doing live technical analysis. So essentially, the first market we'll start off with here. We'll go over the precious metals. We'll also look at Brent crude oil and also light sweet crude oil. So the first market we'll start off with is the gold market. Gold is currently poised at a major area of support. So you can see here, we're currently sitting at 5-year lows. We haven't been at these levels since 2010 on gold. You can see we're sitting right around 1,060 US dollars per ounce. You can see where the market has been breaking down. We've been in a bearish primary trend, and the overall trend over the last 5 years since 2011 has been bearish here. So we've seen over the last 4 years, we've seen this downward trend, which has been very strongly intact. We've continued to see year-on-year gold break down. Over the course of 2015, gold is currently down about 9% year to date at the moment. So that whole shift from where gold continued to rally every year for 11 years in a row, we're now starting to see this breakdown in gold, and we're starting to see the potential here for another wave lower on this FOMC statement. So we want to really keep a very close eye on this key level of support at 1060. If we get a break and a close below that level, the floodgates could really start to open. So first point, you want to identify major support and resistance channels on the larger time frame. Okay, so I'm on the monthly chart at the moment. We can go back just to the highs here, going back to November and December 2007. So we've got $1,033 an ounce. We've also got $1,050 an ounce. If we just go a little bit below that as well, we can see $1,007 an ounce. These are really the major zones which our traders are targeting in the downside. Psychological support will be at $1,000, and then you've got a potential to break down to 980 beyond that. And if we keep taking out those levels, we'll be just looking to the next key level of support. So that is some of the major zones identified on the monthly chart. Then we'll just break it down into the weekly chart to get a better idea of what is occurring. So already this week, we've taken out last week's lows. Now, this was the big capitulation and bullish engulfing candle, which formed by the end of the non-farm payroll. So we saw a big breakout to the upside, and there was a lot of anticipation that we might be able to just increase the momentum. It might continue to follow, but it hasn't followed through. And we've already taken out last week's lows. So what we want to do now is we want to go out and see where the next key level of support is. So we go out to the daily chart, and you can see here we've got a nice little inverse hammer. We formed a bearish candle yesterday, bearish close as well, closed below the previous day's lows, and you've got really this key area of support just sitting between $1,046 up to $1,050. So what I would be looking at tomorrow is the potential for, I just put my risk to reward tool just to show you here, I'm looking for the potential for a breakdown of $1,046 an ounce. Now there's going to be the potential for an aggressive entry and a conservative entry. So let's say we have this exact setup at the moment as we're going into the FOMC statement tomorrow. And let's say the US, they go ahead with the interest rate hike, we see the US dollar rocket. I will be looking in the first instance here for an aggressive entry for a sell short. So you can see here, we're keeping just the stop loss above the last couple of days worth of highs there, the weekly highs so far, and looking for a nice sell short opportunity, getting in pretty tight on my first trade, quite an aggressive entry on that, just stop loss above the weekly highs, entry just below the weekly lows, and I could see that potentially if we drop down to about $1,000 in the short term, that could be circa around a 2-to-1 at least. But if I went even more aggressive here and just put my stop above the daily high, just depending on the overall price structure as we go into the FOMC statement tomorrow, you can see here with a tighter risk to reward, I have got the opportunity here to actually, if we took it down to $1,000, it would be about a 4-to-1. So there is quite a nice little setup brewing at the moment. Now, if I was going for a more conservative entry, depending on the price structure tomorrow, I would just extend my entry here to a break below key support, which is sitting at 1,046. So I'll probably just tuck it just slightly under that to allow for the spread and just allow for a confirmed break. So $1,044 an ounce, you can see that is where we would get a nice confirmed break. And then you can see the 1-to-1 be sitting at $1,019 an ounce, and a 2-to-1 sitting just shy of $1,000 an ounce. I will probably look to trail that stop loss. So that's what obviously we're not into the FOMC statement yet. We've got one more day's worth of trading and we've got the close today, so we might see a slightly further, a bit more bearish move today. Ideally, actually, it would be good if gold is sitting right at key support prior to the FOMC tomorrow, because it means we can tighten up the stop loss. You can get in really tight just for a break of major support there, and we can look to really ride that to the downside. That's what I'll do if it's a bearish announcement. However, if we do get a bullish announcement, which there is potential also for a breakout trade, could be a contrarian move. If we do see a breakout to the upside, first off, I'll be looking for a break above weekly highs here. So if we do get a nice break above the weekly highs, we'll be looking to get into that on a break above circa about $1,081. You can see the potential, and we've got quite a lot of upside potential as well. If we go into the weekly charts, you can see there is also a nice little trend channel forming on the weekly, where if we were to get a breakout to the upside, you've got this nice little trend channel where we've seen the price ricochet, support resistance, where there could be an opportunity for quite a big short covering move if we saw a breakout above key resistance. Again, this would be an aggressive entry, and it depends where the candle starts off tomorrow in terms of the stop loss there, but we would be looking to take that initially, would look at an aggressive entry on that trade, and then once we break through this supportive zone, particularly if we take out the highs from non-farm payroll on Friday the 4th of December, I will be looking probably with a 50% stop on that, and then just bring my entry down to, let me just adjust that ever so slightly for you just to show you. We're looking for a 50% entry and then a break above that key resistance zone about 1,090, and then you can see the potential really, if gold was to rocket off that announcement, there is also quite a large risk to reward potential. So at the moment, I really like the price structure of gold as we head into this statement. There's the potential for a nice breakdown in price, and certainly there's a potential for an aggressive entry, conservative entry, and to the upside as well. If we were to see a shock announcement tomorrow, or if it's already been priced in to some degree, the anticipation of a rate hike, and we don't see gold breakdown and silver breakdown, and we see a reversal, see, that's what we had on non-farm payroll, which is worth taking into account, is that the numbers actually came out strong on non-farm payroll for the US economy. However, the US dollar, it initially broke out to the upside, but then it started to sell off, and we saw gold just forming a bit of a doji indecision, and then eventually it broke out into the end of session. Really, we followed this through all of our traders. We traded non-farm payroll live, and we took this breakout trade. It was over 250 points move, and it was a really nice little breakout there, but it was important to note that it wasn't a logical move that you would anticipate. For the non-farm payrolls, they actually came out weaker than expected, and we saw this contrarian move on gold, and we saw a lot of short covering. So I would really just have the flexibility that on tomorrow's announcement we could really go either way here on the market. We don't mind. What is important here, it's not the fact of what actually the statement delivers, it's the fact that tomorrow we just want a big move. We don't want a non-event. If the market's hardly moving, they're stagnant, there's not a lot of opportunity there. It's a big move. We want a nice big breakout confirmed move in either way. So if we break through support, we'll sell it. If we break through resistance, we'll buy it, and then we'll ride that trade through. We'll take it for as many points as possible between now and Christmas in order to get a nice bonus on this. We'll trail the stops, and we'll be managing that with all of our traders live at the Private Traders Club. So that is really gold, what I see in terms of the technicals right now, a day before the FOMC statement. And I would really suggest you do definitely just want to get yourself prepared for that, and if you are going to be trading that live, just make sure you've got some time. There is actually an opportunity for you to join us trading that live as well tomorrow, which I'll talk you through very shortly as well. Now we'll just move it over and have a look now at the silver market, because silver is interesting because it could actually be telegraphing early where gold is heading. So what you'll note on silver, and we're not seeing, this is not, doesn't appear to be on many people's radars at the moment, but silver has actually already broken through its major supportive zone. We've already come down to the 2009 lows at the moment. You can see here where we finally had a break and a close below 1396. So again, what do we need to do when we're looking to trade a market before a major announcement? Look at the key levels of support and resistance, start off with the larger time frames. So you just have a look here, and silver has recently breached through that key level of 2015, which was $14 an ounce. We've had a break and a close below that level, and we're already breaking down. You can see we're already starting to build some momentum just to the downside here on silver right now. You've also got this overhead trend channel here where you can see very clearly with a nice little wedge pattern we're breaking down already. I'll just move it over to the weekly chart. This is really important in terms of the move that we've had so far. We've already broken and closed below this supportive zone. So we actually closed last week at 1391. So silver might be telegraphing early what we're going to see happen on gold, especially if gold sits around key support heading into tomorrow's FOMC statement. So we're getting very close to these potentially a very large sell-off here. So we definitely want to have silver on the radar. You also want to be careful not to get into too many positions prior to this announcement tomorrow. You want to be really having your capital preserved and ready to go and be able to take advantage of the move tomorrow. If you're in trades already, then you want to be moving your stop losses and protecting those trades as well. But we would suggest here you really want to be getting into the trades from tomorrow, from the actual statement, and getting into those real time once we've actually had the decision from the FOMC. But silver, for me, it's definitely one to have on your radar because we have already broken and closed below major support. If we see silver sell off significantly tomorrow prior to the FOMC and it continues to follow through, gold we would be looking at next. Often you'll get potentially about a 2 to 3 day lag time between the two markets. So silver is actually leading the way to the downside at the moment. Interestingly, on the non-farm payroll announcement going back to Friday the 4th of December, silver led the way first. It actually started to break out first, and we were already seeing quite a big move on silver and platinum, and then we saw gold follow through a little bit later in the session. But by looking at those intermarket correlations, we were able to have a bigger edge in terms of our predictability for trading gold for a breakout. It gave us that slight edge in the market where we could anticipate that. So those are really the two markets in a lot of focus now as we head into tomorrow's statement on both gold and silver, particularly as we're heading into the statement tomorrow. Now we'll move over and we'll have a look at oil right now. So oil, we have seen some profit taking today. We've been trading this overall breakdown in price since the OPEC meeting, which was on Friday the 4th of December. This is where we broke down in price to just show you the key level of support which we've broken down on that meeting. Now recently, yesterday we actually broke down, it was on UK oil here, we came down and we broke very close to 11-year lows. You can see there's been a bit of profit taking, which is no surprise because we've had over 5 days of consecutive lower lows, lower highs on the chart. You would expect some profit taking, and it's no surprise also to get profit taking before an FOMC statement. So a lot of traders will start to take their positions off, potentially bank some profits prior to that. What you want to keep an eye out for are any rallies that get sold into here. So there is the potential for more downside. We could see potentially another move down to $35 per barrel for Brent crude oil. If we get to that level, that's about another $3 move from where we are right now, and we could break as low as $30 a barrel, which will take us really down to the lows and breaching the lows actually of 2008 and 2009. So we're sitting at these critical levels. The fundamentals and the technicals are all lining up at the moment for potentially more downside. If you go over to the larger charts, the monthly, the weekly, the daily, everything is confluencing for a larger move here. So I would be looking to sell into any weakness on confirmed rejection. So what I want to see essentially in the market is if we do get any relief rallies here, we get a bit of profit taking prior to the FOMC statement tomorrow, I would be looking out for these rejection candles to form here in line with the overall downward trend in the market. So whether you can see, you can just draw in your trend channels here and you can see where we could get a potential rotation back up to the resistance zone here, and then we'd be looking for selling opportunities, any real good sell setups, good rejections off the upper end of the trend channel to get back short. There is an opportunity for you to trade that as well live with the Gold and Silver Club. You can join the Private Traders Club. Now there is an opportunity for you to join. Members of the Private Traders Club, you get access to Master the Markets training course, live trade setup forum, live technical analysis video, the inside tracks, or week ahead trading plan, and also VIP email support. So what I'll do, I'll just take you over to that. It's just very simply, it's www.theprivatetradersclub.com. Okay, so all you want to do there is just go across to www.theprivatetradersclub.com. So essentially, at the Private Traders Club, you get access to Master Markets Trading Course. So that is our signature trading course designed to really give you thorough understanding of the commodity markets along with proven fundamental and technical trading strategies. These are the exact trading methods that professional traders and investment banks and hedge funds use around the world in their daily trading activity. So we always are well aware of where the money managers are positioning themselves, the fund managers, where we are seeing the big speculative short positions or net long positions in the market. We are aware of where the big money is flowing, and we have strategies which are always giving us edge in the market to make sure that we take advantage, particularly on these massive news announcements. We prep for those thoroughly, and we really give everybody the best possible opportunity there to make a lot of profit from those trades and get results. Most important thing at the Gold and Silver Club is that you get results. Now, what we really like at the Gold and Silver Club and the online trading course is it allows you chronologically to go step by step through each of the modules, which you can learn exactly how to trade the commodity markets. You can go over that in your own time. In fact, over Christmas is perfect to actually study the Master Markets Trading course, because you can start real 2016 with a bang by having this very comprehensive commodities trading program available to you. So the Master Markets Trading course really covers everything from fundamentals, technicals, the indicators, everything that we utilize at the Gold and Silver Club. You also get access to the private traders setups here. So we've got our live trade setups, which are made available to all of our traders. Now, the implementation of this is very fast. So as soon as there's a new trade setup, it's sent out to all of our traders via email, also made available via our private traders forum, and our traders are all able to have access to that real time. So you've got the exact entry, exit, the take profit levels, all the exact levels that we're utilizing at the Gold and Silver Club. I've shown you several examples of our recent trades on OPEC, of FOMC statements. Everything's really transparent, makes it really easy for you to implement. So you've got the theory there, but also the implementation. We also provide the week ahead trading plan, so that really gives you a great roadmap for the week ahead. So we prepare thoroughly all of the major trade setups for the week ahead, chart analysis, commentary across the markets. We look at the fundamental. We really prepare you thoroughly in order to make the most of the trading opportunities the week ahead. A lot of our traders absolutely love that. Saves them a lot of time at the weekend. They can just go through that in their own time, and it's absolute gold dust for you to prepare for the week ahead. And you also get access to live technical analysis videos. So we host live trading rooms throughout the week, which are also recorded. You can join both the live trading rooms live, and you can also watch the recordings as well. And those are perfect to give you a better understanding into how we get edge on our trades, the exact strategies that we implement, our entry levels, our exit levels, how we get such a good level of accuracy on our trades. We've also got a live forum and community where there's a lot of questions, a lot of support. We often get told our support is absolutely outstanding. We offer, as well as support during those live trading sessions, we offer a VIP email support line so you can get all your questions answered. So whether that's about the trading course, the technical setups, any market related queries, all of those are answered for you. We are always there to provide you with support. You're never ever left alone. And we provide this foundation from absolute beginners. We put, especially our training course, it's really designed for absolute beginners to start off your trading experience, from everything from risk to reward to setting up your charts on AFX Capital to get all the strategies and understanding of how the market goes through the fundamentals. Everything is step by step, so nothing will be over your head. Everything is covered by the foundations. Each module is in the chronological order as you go through the course, so it really sets you up nicely to move actually for 2016, but to profit from the commodities markets. And there is also an opportunity to trade the FOMC announcement live with us. So if you are ready to take your trading to the next level, if you would like to enroll for that, all you need to do at www.theprivatetradersclub.com, you just go, once you're on that page, go to the bottom, there's a little red tab there. You just want to click on ready to get started, enroll here now, and from there you'll be taken to the following page. What you want to do, just make sure you complete all the fields in the application form, and very important, just make sure you also click on apply now. So once you've gone through that form and clicked on apply now, again, very simply, you will be taken onto the application. So if you are ready to take your trading to the next level via the Private Traders Club, if you'd like to join us for the FOMC statement tomorrow, or if you just want to get set up to have a great 2016, again, all you need to do is go across to www.theprivatetradersclub.com. Membership is by application only, complete the enrollment form, and we'll get in touch with you ASAP to get you set up for your trading.